Well, Black Monday may have passed, but Tuesday is looking particularly dark. To give you some context, we have a leading indicator that comes out before the market opens. Yesterday it was suggesting would fall about 2%, 2.1%. We ended up falling 4%. Today, that indicator is suggesting a fall of about 3.7. So it indicates that before the market opens, it's actually expecting a worse day than what we were expecting yesterday. Yesterday was horrific for investors. Out of the top 200 stocks on the Australian stock market, only 6 made gains. So it's 194 stocks going backwards yesterday. We had some of the major parts of people's portfolios, like the big banks, like the big miners, dropping over 5%. Fortescue Metals, which is an iron ore miner, it dropped 14.7% after reporting results into the market. BHP, the big Australian, it'll actually be releasing results today. You couldn't think of a worse day to be doing it. That will happen after the market closes, so that impact may not be felt until tomorrow, but you would suggest that they will also be feeling the pinch here. Now, although this global share market volatility isn't a direct indication of how the global economy is occurring, it does have real implications. We've got the price of oil, the price of iron ore, the price of copper, key commodities that the Australian economy relies upon, all falling to 6-year lows at the moment. That means less money coming into these companies, that means less tax revenue for the government, and that means less return for investors. At the moment, you'd expect investors are bracing for this volatility in the early part of the session, and then the key time, our market opens at 10 a.m. and then at around 11:30 Sydney time, we'll see the Chinese market come online, and we want to see whether or not the Chinese government has been able to take steps to stabilise their stock market and whether or not they can have the effect of calming nerves on global markets. But at this point, it's hard to know what that catalyst will be.